Hello, everyone. Thank you for joining us on this Saturday, and welcome to this Specialist Trading educational presentation. Now, today I'd like to talk to you about two trading components that I truly feel will change the way you trade. The beauty of this presentation is that you'll be able to start applying them as soon as you like, as early as Monday. But before we begin, I wanted to wake you up a little bit because I know it's a Saturday morning. Some of you are just starting out the day, and so I want to start out with some facts because facts can always clear your mind and really point you in the right direction. Now, the facts state that 80% of all traders will lose money. Now, when I say lose, I don't mean that you're just going to kind of go into a drawdown. Basically means you'll lose everything you've set aside for trading. So let's imagine we have 100 people talking here today, or I should say listening today to me speak. Basically, 80 of you will eventually lose everything you've set aside for trading. Now, this means that 15% of all traders will break even. So 15 out of the 100 listening here today in today's presentation will just break even. Now, that's really no small feat in today's markets. You basically aren't losing anything, but you've put in a lot of hard work and time and especially money just to break even. So what does this break down to? It means that only 5%, only 5 of you listening today, of all the traders will be consistently profitable, just that small amount. If you want to see what that looks like on a pie chart, as we look here, we see this large portion in red represents the percentage of traders that will ultimately fail. This blue slice here represents the percentage of traders that will just break even, and this small little green sliver represents the percentage of traders that will ultimately be profitable. Now you have to ask yourself, how is it possible that the majority of all trading profits are captured by such a small percentage of traders? You've heard me say this before, and I truly believe this after trading for over 4 decades, that there are enough profits, even on a daily basis, to go around for everyone. There's an infinite amount of profits for everyone to take. It's just the markets are just asking for us to take them. So if this is the reality, then why is it just that a small percentage of traders are able to actually capture that on a daily basis? Well, it really isn't as difficult as it seems. In fact, it's actually rather simple. These traders, these 5% of all traders, whether they know it or not, have learned how to trade in sync with the market. I know that sounds a little bit too simple, but think of it. When you lose money, you're out of sync. You're doing the opposite of what the market wants to do. You're selling and the market goes higher, so therefore you lost money. Or you're buying and whatever you're trading goes lower, therefore you lost money. It just is as simple as that. You are out of sync with whatever market you're trading. If you don't believe me, let's take a look at this older chart in CHK. Someone looking at this would say, well, Steve, I'm not out of sync. The market obviously is going up, so I want to be a buyer. So let's say you went to that chat room and they really love this stock, and so you bought it on the opening here. And for one day, you feel real good about yourself. You feel, okay, I'm in sync with the market. It's going up. I bought it. Look at it, made a new high here. And then if you're in an uptrend, right, you want to be in sync with it. But then this happens. So what happened to the uptrend? What happened about being in sync with the market? You gave it all back, and now you're actually in the loss column. This works the other way as well. Looking at this chart right here in Zoom, this older chart in Zoom from last year, anyone looking at this would say, well, Steve, it's obvious that we're in a downtrend. So you always say to be in sync with the market. That's how we join that 5 percentile of traders who will ultimately be profitable. So I'll either want to short this or avoid it altogether. Let's say you're a little bit more aggressive and you decide to short it, okay, because you want to be in sync with the downtrend. Well, what happened? Okay. Ultimately, you were out of sync. Even though you thought you were, you're really relying on outdated traditional wisdom or worn out tools or indicators that really aren't helping you. So today we're going to be talking about, and you'll be able to use these right away, these two trading components that will actually change the way you trade because they're designed to get you in sync with the overall trend as well as the short-term trend. So it'll make things a lot simpler for you. You'll find out how easy it is to apply this, especially on our platform, the PTS Primo charting platform. When I first started out, I started using these components some 4 decades ago, but I had to apply them and I had to do a lot of mathematics trying to figure out what they were. Now with our platform, everything is one click away. In a matter of seconds, you'll be able to find out the overall trend as well as the short-term trend. So this promises to be a great educational presentation. I want to thank you for taking time out of your Saturday morning, and welcome once again. My name is Steven Primo. I'm the president and founder of Specialist Trading. Now, if you're not familiar with the term specialist, well, I was a specialist on the floor of the Pacific Stock Exchange for a total of 9 years. I was on the floor for a total of 16 years, but 9 of those years I was a specialist. Now, a specialist doesn't mean you are any more special than anyone else. But if you Google those old pictures of the trading floors back in the 50s and 60s, and you see the guys standing in knee-high deep in paper and making all these weird hand gestures, those were floor traders, and the ones behind those large podiums making those hand signals and gesturing were the specialists. In other words, they specialized in making markets in roughly about 50 or 60 stocks. So if a floor broker wanted to buy or sell a particular stock for his stockbroker, and the stockbroker in turn was buying it for you, his client, the specialist would make a market. He would actually buy or sell that particular equity. So I did that for roughly 9 years on the floor. I traded and made markets during the crash of '87 and the bull market that followed. So I've traded just about every market environment, straight up, straight down, sideways, and on top of that, I've traded just about every trading system or trading strategy or method you can think of. In fact, many of the so-called brand new methods that are on the market today have actually just been rebranded. They've been around for ages. They've just been had a few minor alterations, be renamed and whatever, or just applied to a specific market. But they've all been around. Now, in my 44 years of trading, I've traded just about each and every one of these new trading techniques and method, and I've traded in different market environments. So I know what works in terms of consistency, and I know what doesn't work. So roughly a little over a decade ago, I teamed up with Pro Trader Strategies with one goal in mind, and that was simply to teach traders around the world the things that work in terms of consistency and the things that don't. Now, someone would say, well, Steve, why teach? Why not just make a system or sell these systems? Well, the point is because most traders do that already. You go out and buy that $10,000 system, and you just basically wait for someone or something to tell you what to buy or sell. You see, that in my mind is a recipe for a disaster. That is one of the things that attributes to 80% of all traders failing. It's because you're basically letting someone else trade for you. The traders who I know, myself included, who are still around, they're still trading from those days when I started in the 70s, are the ones that make their own trading decisions. So that's what I want to instill in all my students around the world, in over 115 countries and in every state in the United States. And that's basically you have to make your own trading decisions. I mean, think of it. How do you trade? How do you buy or sell something? Do you go to a chat room? Do you watch the guys on TV tell you what they think you should buy or sell? Do you have some system that spits out automatic buy and sell signals? Every time you do that, every time you take one of those signals from a trading room or from someone on TV or from some great system you have, you're basically telling the markets, I don't know what to do. I don't have enough experience. I don't have enough expertise. So why don't you do it for me? And that, once again, is why a major reason why most traders fail. So our goal as an educational company first is to teach you how to trade. You'll see that in today's presentation. Now, before we begin, as always, we are required by law to share this with you. So please take a moment to view our disclaimer. I'm going to share with you a lot of performance results. I think I have about 150 slides today. So a lot of chart examples to share with you on these two components. But please remember that we can in no way guarantee that any of the performance results I'm about to share with you will be repeated in the future. Also, since we are an academic company, all examples are strictly for educational purposes only. So, as you're taking a moment to view the disclaimer, I would also like to take this time to invite each and every one of you, who haven't done so already, I see a lot of new names here today, to follow us on Twitter. This is our handle right there. I would suggest copying that down because every day I post different educational information, anywhere from signals our strategies have generated and little bits of financial wisdom. Also, I go into detail sometimes explaining why a signal was generated or why a certain method produced these type of results. So there's a lot of great free education on a daily basis. So please feel free to follow us on Twitter. So remember, once again, our only goal as an educator is to teach you how to trade. Remember, in my opinion, the only way you will be a consistent trader, and by consistent, I don't mean that every trade is going to be a winner. I just mean that you'll have longevity. You'll have something to sustain you so that you just don't have a couple of good months under your belt. You have maybe a couple of good decades. The only way to do that is by teaching you so that you can ultimately make your own decisions. You see, my goal as an educator is not to force feed you signals. It's not to tell you what the market's going to do next week. If you think today I'm going to tell you what I think the market's going to do or what the best stock is to buy, you really come to the wrong place, because that goes entirely against our educational philosophy. Our philosophy is simply to teach you how to trade with the specialist edge. This is the same edge that was taught to me some 44 years ago, and what I believe has truly been the cornerstone to sustaining me. And hopefully I'll be able to teach that same edge to you, to all my students around the world. Now, remember, this is an educational class today. I'm going to teach you a couple of great little components, but as always, if you have a question, please wait till the end of class to ask questions. I promise I'll get to each and every one of them. The only question I will answer is this, and is this being recorded? That's the main question that most students ask. Yes, it is. So if you have to leave early or if you're having technical issues, don't worry. Each and every one of you will be sent a link to this recording. Okay? So please, if you have a question, wait till the end. I will get to them then. And with that stated, let's begin today's educational presentation. Oops, kind of jumped the gun there. And as you just saw, I want to start off with what I learned on the trading floor. Because remember, when I first started some 4 decades ago, I struggled tremendously. I make no secret about this. In my first year or two, I didn't even think I was going to be on the floor that much longer because I really couldn't make ends meet. Sure, I'd have a couple of good trades, maybe even a couple of good months, but then the next trade or two, I'd give it all back. I'm sure you've all been there before, right? Maybe you're experiencing that right now, but it's very frustrating, very discouraging. You put in a lot of hard work and time into this, and you don't see any results. So I was lucky enough to have some mentors that saw how much I was struggling. And here are the things that they taught me. What my mentors basically said to me was, Steve, the market, not some guy on TV, not someone in a trading or chat room, but the market is always giving you a clue as to which direction it wants to go. Your only job as a trader is to listen and then jump on board. See, that's it. Really, trading is no more than that. All you have to do is learn how to listen to what the market wants and then jump on board in whichever direction it wants to go. You see, but we've always been taught, and we focus too much on predicting when it's going to go up or down, predicting how high it will go, how low it will go, or trying to fight it, saying, well, it's gone up high enough, it's overbought, right? You've always heard that. This is way overbought, so we got to sell it. Or it's oversold. It's way down too far. All the indicators are oversold. We're always wasting too much time on needless things like earnings or economic news or what some guru was saying. We're always focusing on outside sources instead of focusing on the source itself, which is the chart in front of us. You see, we're never taught to focus on that. Think of it. How do you make your decisions? You're focusing most likely on something outside of what you're trading. Myself included. When I first started, I did the exact same thing that most likely the majority of you are doing right now. Listening to economic news, the earnings, waiting to see what some guy says on TV, or going to a trading room or chat room, or looking at overbought, oversold conditions, or listening to the institutions. I did all that 44 years ago, and I'm here to tell you that it really doesn't work in terms of consistency. Remember, for the first 2 years, I really couldn't make a dime, and I thought I was not going to be on the floor much longer. So, what if there was a tool designed to have you on the right side of the overall trend? In other words, designed to have you listen to the market so that you would know what the overall trend was. Well, there is. This is component number 1. We're going to be talking about the buy-sell line. Now, before you think this is some convoluted indicator that you have to construct or spend $10,000 on, no, you all have access to the buy-sell line right now. Whatever platform you're trading, whatever market you trade, the buy-sell line is simply the 50-period simple moving average. That's it. But before you think it's a moving average crossover or it's got to be a specific, way to apply it, it's actually really simple. In order to use the buy-sell line or the 50-period simple moving average properly, you have to ask yourself a question before you take a trade. It doesn't matter what strategy you're using. I don't care if it's based on fundamental news. I don't care if it's based on astrology. It makes no difference. But you have to have a 50-period moving average plotted on whatever chart and time frame you're trading. And then before you pull the trigger, Before you buy or sell, ask yourself, where is price currently in relation to that buy-sell line? Okay? Now, this is so important. I'm going to repeat this again. Always ask yourself, where is price in relation to the buy-sell line before you buy or sell? Because once you ask yourself that, you'll only come up with two possible scenarios. If price is above, then you will only have a buyer's bias. That means if you have a sell signal with whatever strategy or technique you're using, but price is above, you should not take it. The odds are going to be against you that will work out. Conversely, if price is below, then you should only have a seller's bias. That means all your strategy signals should be coming from a selling point of view. If you get a buy signal and it's below the 50, I'm not going to tell you that it won't work out, but the odds are over time, it'll be a small portion that'll work out and the majority of them will not. You see, using this rule is like going to Las Vegas and playing the slot machines. I'm not telling you that you can't win. In fact, I know some people in my family that do extremely well playing the slot machines. But they're the minority. It's unbelievable because the majority of people ultimately fail. In fact, they have the worst odds of any game in Las Vegas, the slot machines. But they're designed to give you a win every once in a while. Why? To give you that false sense of security so that you'll stay there. And ultimately, you'll give all the money back and then some. It's the same way with buying below the 50-period moving average and selling above. Sure, you will have some really nice trades every once in a while, and it'll give you this false sense of security that you're doing well. Trust me, I did the same thing 44 years ago, and I used to think, okay, now I'm on track. Now I'm starting to learn. But then ultimately, I'd give it all back and then some. Why? Because I was out of sync with the buy-sell line. Now, if you still don't believe this, let's look back at those charts we started out the presentation with. All right, remember we thought we were in an uptrend. Perhaps you even bought somewhere right here and felt really good about yourself, right? Remember, before you do anything, I don't really care what your strategy is. It really doesn't make any difference in this presentation. We're talking about just being in sync with the market. The first thing you want to do is click on the buy-sell line. That's the 50-period moving average. And then we ask ourselves, where is price in relation to that? Price is below, right? So we're not in an uptrend. We're in a selling opportunity. So the overall trend is down. Therefore, we should be looking for sell signals. And you see how this would have helped us much greater. Sure, if we had bought right here, it would have felt great for a couple of days. But here's what most traders do. When it starts to go against them, most traders don't sell. They hope and pray for it to go back up. Or even worse, they buy more, right? You say, well, let's double up. Let's buy some more because it's going to go back up. And then weeks later, you have a major loss. This works the other way as well. Remember, we thought we were in a full-fledged downtrend, all right? This is where traders think they're in sync with the market, but they're really not. Because the first thing you want to do is apply the buy-sell line, the 50-period moving average, and then you ask yourself, where is price in relation to that? Well, price is above. So we're not in a downtrend. We're in an overall uptrend. So what this means is rather than look at this from a seller's point of view, you should be looking at it from a buyer's perspective and that there may be some opportunity to buy here. And that would have been the right thing to do because look what happened just weeks later. You're making new highs. So this is why traders fail. You are out of sync with the market. Remember that 5% is able to capture and be in sync with the overall trend. Okay? So now you know how to do it. It's that simple. There's nothing you have to purchase. There's nothing you have to buy or nothing you have to calculate on a tick-by-tick basis. It's right there for you. Now, that's the overall trend. How do we find out what the short-term trend is? Because we want them to be in sync. Well, this brings us to component number 2. We're going to use our top-bottom 25% bar. Remember, a lot of you are saying, oh, okay, well, this is the hitch here. I've got to buy this, right? No, you can do this on your own. It takes a little minor calculation, but it's simple. So what exactly is this top-bottom 25% bar? When a bar closes in the top 25% of its range, and as well, it's above the 50-period moving average, obviously, the market is saying it wants to go higher on the short term. So think of it. You now have simplified your trading tremendously. You don't have to look at a weekly time frame and then go down to a daily time frame and make sure that they're in sync with each other. In fact, I often tell my students, listen, if you want to use that technique, you can, but I, in 44 years, have found absolutely no consistency with using that. I don't look at different time frames. I only trade the time frame that the signal is generated on. I don't care what another time frame is doing. It doesn't make any difference. There's no consistency in there. It's almost like an urban myth. I don't know why so many students hold on to that. If you want to, once again, it's your choice, but we don't teach that. If you want to get the overall and the short-term trend in sync, just apply the 50-period moving average, which I just taught you, component number 1, along with the top-bottom 25% bar. Now, if you're curious to find out what a top-bottom 25% bar is, let's look at this generic bar here. And it actually makes no difference what market it is. It makes no difference what time frame. This could be a tick chart, could be a monthly bar. Makes absolutely no difference. What you want to do is divide this bar by 4 separate but equal parts. All right? And if you close in that top portion, that top 25%, what is the source telling you, the market you're trading? Remember, not some guy in a chat room. What is the market telling you? Well, it's basically saying that it wants to go higher on the short term. It's that simple. Now, when a bar is below the 50-period moving average and it closes in the bottom 25% of its range, it's telling you that it wants to go lower on the short term. So once again, if we look at a generic bar here, all you have to do is divide it by 4 separate but equal parts. And if you close in that bottom 25%, once again, the clue you're getting from the source of what you're trading, the market, it's telling you it wants to go lower on the short term. So when you combine this with the overall trend, you have the overall and the short-term trend in sync, you have high probability setups. All right? You have the makings of a really high probability setup. Now, this is not a strategy. I don't want you to start thinking like, wow, this is amazing. I'll start trading this Monday morning. No, these are just two ways, 2 components to really get you in sync so that you can hopefully one day join that 5 percentile. You can apply any strategy, but as long as you see these 2 things in combination together, it'll really improve your odds for consistency. So let's look at some component number 1 and some component number 2 examples, just to show you how well this works. And remember, everything you're going to be seeing today is coming from our displays on the PTS Primo charting platform, designed to teach traders how to trade. The beauty of it is that everything I just shared with you, both components 1 and 2, are 1 click away. There's nothing you have to format. There's nothing you have to divide into 4 separate equal parts. It's done for you automatically. Let's see how simple this is. All right, as we look at this chart here in OSTK, someone looking at this would say, well, Steve, we're kind of going up a little bit, but I think we've met some resistance. You say, well, why do you say that? Well, that guy comes on at TV after the close every day, says there's some major market resistance here. Maybe this is a Fibonacci resistance. And he says that you shouldn't touch this until it breaks out because there's really no clear-cut direction as to what it wants to do. Okay? You see how all my justification was based on what some guy was saying, right? Remember, they have no higher level of consistency than anyone else. Learn to listen to what the market is telling you. So how do we do that on the platform? First thing you want to do is go in the upper green corner here, and the left side, you see the buy-sell line. You click that on, and in a drop-down menu, we have 4 different ways to view it. Let's click on the easiest, which is just 50-period simple moving average. And when that appears, you ask yourself, where is price in relation to the 50-period moving average, the buy-sell line? Well, price currently is above. Now, we only have about 1, 2, 3, 4, 5 bars, 1, 2, 3, 4, 5 closing above. Now, your ideal goal would have to be a lot more, but all you really need are anywhere from 2 to 5 closing above, sometimes even 1 closing above. That's really all you need. Now, that's the overall trend. So the overall trend, regardless of what this guy says about being in the face of resistance, the overall trend is up. Now, if we want to see what the short-term trend is, we click on top, bottom, 25%, right next to it. These are our very first 2 components we teach all of our students, regardless if you're a hedge fund manager or if you just started trading. It doesn't make any difference. And then in the drop-down menu, you'll see right here, click on signal arrows. You want to see where the arrows are for all of the bars that close in the top or bottom 25%. And as you can see, we have 1 and 2. So this very last bar here, along with being above the 50-period moving average, is telling you you now have the overall trend and the short-term trend in sync to the upside. There's nothing you need to know about resistance. There's nothing you need to know about volume. There's nothing you need to know about the earnings. The market is telling you it wants to go higher. And as we can see, weeks later, it was up 45 points. Do you see how simple trading can be when you learn how to just listen to the market? Here's another example, SPCE. We're above the 50-period moving average, and the last two bars close in the top 25%, as represented by the green up arrows. Weeks later, stock's up 35 points. Funny how that works, right? As we look at KLAC, we're above the 50-period moving average, so even though we have a sell-off here, this is a buying opportunity. Now, if you want to wait for the first up arrow signifying a top 25% bar, it's right here. And that was your sign that the short-term trend along with the overall trend in sync, and the stock went up 58 points after that. Here's another example in WDAY. We only have one bar closing above. Okay, now obviously this one closed below, but then it bounced right back up again. And when you see here we closed below, there was no red arrow above it, meaning that the short-term trend had not signaled a downtrend. Remember, you would need to close in the bottom 25%, which it didn't do. But this closed in the top 25%. You only have one day above, but that's enough because the stock went up 52 points after that. You see how you're learning to listen to the market. Remember, we said a job of a trader is simple. It's only twofold. Listen to what the market wants to do and then jump on board. That's it. Now, when you listen to earnings, when you listen to what the institutions are doing, when you listen to some guy on TV or in a chat room, you're not listening to the market. You're basically saying, I don't know what to do. Why don't you tell me? You're telling the markets you don't have enough experience or knowledge, so you'll let someone else make your decision for it. Can you imagine if you were in the operating room and someone was operating, a surgeon was operating on a patient, and he looked around at everyone and said, hey, why don't you guys tell me what you think I should do here in this operation? That would be unbelievable, right? But traders do this every day. Why is it any different? Well, it shouldn't be. You should be making your own decision after careful study and review and taking our educational courses. All right, let's look at another example here in BIDU. Now, we are above the 50-period moving average right here, and we have a cluster of bars that close in the top 25%. Now, nothing much has happened, but this is a sign that the market is like coiling, getting ready to go up. Now, this was in December of last year. Coming into the middle of February, the stock was up 185 points. See how the market tells you what it wants to do? There's no reason to listen to anyone or anything else. As we look at Tesla here, we have component number 1 and component number 2. So how can we find out what they are? Well, we had the 50-period moving average, the buy-sell line. Click on 50-period, and we see that that's component number 1. We are above. For component number 2, we click on top-bottom. Click on signal arrow to find out the top 25 bar, and as we can see, it's right here. So now we have the short term and the overall trend in sync. Do you notice how I didn't look at a weekly bar to find out if it was in sync with the daily and so forth? There's no reason to do that. I mean, if you want to, you're free to do whatever you want. But once again, the markets are full of trading techniques and methods that really have no levels of consistency. But they're just like urban myths that people continue to repeat over and over again for some reason. I did myself. I used to use this, and finally one day I woke up and said, you know, this doesn't work at all. It's just keeping me out of trades while I'm waiting for things to line up. Why don't I just focus on the time frame, the chart that the signals are generated on? So if I'm trading a 10-minute chart, and that's where the signal is generated on, that's the only chart I'm looking at. I don't care what the hourly is doing or the daily. If I'm trading a weekly chart, for a signal that's generated on a weekly time frame, I don't care what the weekly, or I should say monthly chart or even yearly chart is doing. It doesn't make any difference to me. I only concentrate on the time frame that the signal was generated on. So as we can see here, Tesla in November generated a buy signal, or I should have said an overall uptrend and a short-term signal, and it gained 400 points in just 2 months coming into the middle of January. Now, what happens if we go into a bear market? I know a lot of you are saying, well, Steve, we've just been going straight up. It's simple. Everything goes straight up. You're right. We have been going straight up for the past year or so. Let's look at things that may happen the other way, because it works the same process. There's nothing different. As we look at Facebook here, here's an older chart of Facebook in January. How can we tell which direction this wants to go? Sure, the last two bars close lower, but it's not enough information. Well, yes, it is actually, because if we apply the buy-sell line, click on 50-period moving average, we see that we actually closed below the buy-sell line. All it takes is just one bar in this example. And if we apply the top-bottom 25%, we see that once we click on signal arrow, that we close in the very bottom portion. So the short term and the overall trend are in sync to the downside. And as we look here further in the days that came into January, the stock fell 27 points. And you see how we kept confirming more and more. It's telling you that it still wants to go lower and lower. As we look at NOC here, even though we had an up day here and the stock appears to be rising, we are still below the 50, and this bar closed in the bottom 25%. Northrop Grumman apparently fell 15 more points in the next week. Gold, okay, this is Barrick Gold, is below the 50-period moving average, and we have a couple of bars here that close in the bottom 25%. So this is giving us a clue that gold wants to go lower in terms of this gold company, and the stock fell 5 points. That doesn't seem like a lot, but that basically is about, this is a very inexpensive $20 stock. So the stock fell about 20% in the next month. As we look at CTAS, okay, we had one close just barely below the 50. This is a little bit better confirmation right here, closing well below and in the bottom 25%. The stock fell 35 points coming into the end of January. As we look at Lockheed, once again, this is how most traders lose money. They're out of sync with the trend. Most traders would look at this and say, hey, we're going higher. I've got to buy this. That guy in that trading room loves this, and he's been long for the last couple of days. He says he's going to make a lot of money. We apply the 50-period moving average, and what do? We ask ourselves, where is price in relation to that? Price is below. So I don't care what some guy, so-called trading guru in a chat room tells you. If price is below, don't buy it. The odds are out of sync. They're not in your favor. What you should be doing is looking at this as a selling opportunity. And how can you find that? Well, you look for the short-term trend, looking for bars that close in the bottom 25%. Now, these obviously did not, but here we have one. So all we have to do is click on top bottom on our platform, and it automatically shows you an arrow if it's closing in the bottom 25%. So now the short term as well as the overall trend is in sync. Apply your strategy, or apply a little structure to this, and that would have been a nice trade because the stock went down 28 points. So what happened to that trading guru that loved this stock? Okay, remember, if you're out of sync with the market, you're going to join that 5 percentile group. Now let's look at some other markets real quickly and some other time frames so that we know that we can apply this to any market. Not everyone just trades stocks. Let's look at an hourly chart of the euro dollar. This was in the end of February, coming into the first week of March. Now obviously in hindsight, someone could say, well sure, it was easy to see that I should have gotten short the market, but I would have liked to know that in advance. It's easy to see here after 2 straight days down, or maybe even 3 straight days down, that I should have been short or out of this. But how would I have known that, up at these levels to sell, or that it was in an overall downtrend? Once again, you click on the buy-sell line. Click on 50-period moving average. And the market right here was telling you on an hourly time frame that it wants to go lower on the overall trend. So, there's nothing that you have to overanalyze and look and figure out why the euro dollar wants to go down. It's telling you it wants to go down. That's all you need to know. There's nothing else you have to figure out and analyze. In fact, most traders overcomplicate and overanalyze way too much. If you're below the 50, the overall trend is down. That's it. There's nothing else that needs to be asked. Now, if you want to find out what the short-term trend is, click on top bottom 25%. Click on signal arrow. And look at all the arrows that were giving you warnings that it wanted to go lower in the short term. The entire time, you have the short term as well as the overall trend in sync with each other. So that was more than enough information to know at least not to be buying this. as we look at a 1-minute chart of the E-mini futures. Okay, same thing applies. Sure, in hindsight, this was on March 4th when the market really fell out of bed that one day. People were saying, well, yeah, sure. At the end of the day, it was really easy to figure out that I should have been short, but I would have wanted to know at the beginning of the day. Well, if you applied the 50-period moving average, once again, all you have to do is click that on. Once we crossed over right here, you know that you should be selling, or at least be out of the E-mini futures on a 1-minute time frame. You shouldn't be, day trading this. Now, once you apply the top bottom 25%, you have all of these bars in sync with the short-term trend, telling you that it wants to go lower and lower. Lastly, let's look at a 2-hour chart of Bitcoin. Now, this was when in February when Bitcoin was going lower before it started to go back up again. But at this time, once again, how could we have known? Apply the 50-period moving average and apply the top bottom 25% bar and look at all the signals it was telling you it wants to go lower. This is how you learn how to be in sync with the market. It's not something that you have to calculate. It's not something you have to analyze and look over earnings and look over what the CEO wants to do and look over economic conditions. I did that for you 40 years ago. Take it from someone who was there. It doesn't work in terms of consistency. Remember the slot machines. All that type of analysis will work every once in a while, and you'll get a false sense of security thinking, hey, I'm back on track. I guess I'm going to finally start doing well. And then, trust me, in about a month or so, you'll look and say, what happened to my profits? I've given them all back. Why? It's because you were listening to an outside source instead of listening to the chart in front of you. So let's recap before we go to question and answers. Component number 1, you will have a higher level of consistency if you only buy above the 50-period moving average and only sell below the 50-period moving average. All right. Secondly, component number 2, when a bar closes in either the top or bottom 25% of its range, it is telling you which direction it wants to go on the short term. So you combine that with component number 1, you have a really high probability definition of the trend. Now, when you combine these two, remember, you also have high probability setups. You can put together any strategy, any system, any trading method, and if it has these two components together, you'll really increase your odds for consistency with that setup. Doesn't have to be one of mine. It can be one of yours. It can be from another educator, another website you went to. That's okay. We want to educate you. We're not competing with anyone. Our goal as a teacher is simply to educate you so that you can join that 5% out. There's more than enough for everyone to go around. Now, I want to give you a homework assignment, okay, on this Saturday morning here. I want you to go back and study and research these two components, all right? See how well they work, and then go back and look at your last 10 to 20 trades. Paper trade to see if your results could have been improved by applying these edges. Guess what? I can almost guarantee you that you would have improved your results tremendously by applying these two simple things that I just shared with you today, okay? Now, ask yourself, do you think these simple components can help your trading for the remainder of 2021? All right, we're already into the first quarter of the year. Can you believe that? 3 quarters left, plenty of time to get your trading back on track. What if I could offer you a lot more edges like this, advanced edges to increase your odds for consistency, totally different from what I just taught you, but ways to get your trading back on track in 2021? Well, we have a great special attendee discount for all of you today joining our Saturday morning class. We're going to offer you our Secrets of a Stock Exchange Specialist training sessions. All right, this is a 3-hour video course where I go into detail with many more high probability trading edges. We not only share with you which indicators to use, but also which ones not to use. I go into detail about the difference between a system versus a strategy, talk to you about being on the right side of the markets, but here's the best thing about this 3-hour video course. You're going to get the complete rules to strategy number 1. Because if you notice, up until now in today's class, I didn't give any full strategy rules. I just shared with you 2 techniques to find out what the overall and the short-term trend are. But we didn't tell you where to buy. We didn't tell you the rules of where to sell. We didn't tell you where to place your stop or money management techniques. Those are all important pieces of the puzzle if you want to trade a full-fledged strategy. Well, guess what? We're going to give you the complete rules to one of our best pullback strategies. This is entirely different from anything I taught earlier because this is a pullback method designed to buy at a lower level and designed to sell at a higher level. For example, let's look at this chart here in ATVI. Most traders would say, well, we're kind of going sideways to lower. I don't know about this, but strategy number one generated a buy signal right here coming into February last month, and the stock went up 13 points in the next week, okay? Here's another example that our students who are members of the strategy number one course saw. The stock VRSK is kind of slowly and steadily headed higher to sideways. Most traders would say, well, see, it looks like it's an uptrend. Most likely it's above the 50-period moving average, but strategy number one generated two sell signals right here, all right? Ultimately, the stock fell 30 points. This was coming into February. So you're going to get the complete rules to this method. You'll know exactly where to enter, exactly where to exit, and exactly where to place your stop. This all comes as well with educational correspondence. So what does that mean? You're going to get my personal email address. So for any time you have questions concerning the trading or the techniques I'm teaching you on how to trade, you can email me and I'll respond right back to you with any answers that I can give to you that will really help you understand. This is a great, great offer. Now, let's break this down. The entire sessions plus strategy number one course is usually sold on my sister site. That's Pro Trader Strategies for close to $1,000. As a special offer today, we're going to break that down at discount price for a limited time only, most likely just for this weekend, I believe, $37. Think of it, $37. Most likely you lost more than that this past week just trading. For $37, you can get over 4 decades of information plus a full-fledged strategy, one of our best pullback strategies in terms of consistency. You're going to get that for $37, so take advantage of this. This is our Welcome Back to Saturday course discount today. We've taken about a month off because had a lot of different scheduling, a lot of different things going on, but now we're back and we just want to welcome you back with a really inexpensive offer to get you trading at the next level. Here's the information. If you're interested in taking your trading to the next level for 2021 and getting strategy number one, contact Pro Trader Strategies. They're my sister site. I developed the platform with them. I also developed all my courses with them, and they're in charge of the pricing and discounts. You can email them at trading@protraderstrategies.com, but I would strongly suggest, you can do it in 2 seconds, calling up 310-598-6677. They have trading consultants on the phone right now ready to take your order over the phone for $37, and you can be up and running and watching this video course today, and you can be getting that full-fledged strategy today. So this is a great, great offer. Now that link you see at the very bottom, if you'd like to sign up online, you would use this link right here. It's not a live link, but we've just posted a live link in the chat box on the GoToWebinar column on the far right. So if you'd like to just use that, instead of copying and pasting that onto a browser, just click on the chat box, click on the link you see there, and it says the protraderstrategies.com secrets offer, okay? Now, we have roughly about 10 or 15 minutes left in today's class. I promised I would take your questions at the very end. So if you have any questions, go to the, I believe it's the chat box or on the GoToWebinar column, type in your question, and I will answer it to the best of my ability, okay? Someone is asking, does strategy number one work with stocks only? No, it can be applied to any market, any time frame. That's a great question. In fact, all of our methods, it doesn't matter if it's this particular strategy, we have upwards of 10 different strategies. All of our techniques or methods, or even what I taught you today, they can be applied to any market, any time frame. You see, so many times you'll go to a webinar and you'll see a great method, and then at the end they say, now this is only good for the tech stocks, or this is only good on a 15-minute chart. That really narrows your window, closes your window for profitability. We have only methods that can be applied to any market or time frame. Okay, the majority of our strategies and methods work on everything. So this is really a great offer, and all the things I'm going to be teaching in the secrets course can be applied to any market. So I just want to make it well known that if you trade futures, if you trade commodities, let's say you trade Bitcoin only, or maybe you only trade currency pairs, it doesn't make any difference. All of these things can be applied to those markets, okay? Gary's asking, what about choppy markets? Sure, anything can be applied to a choppy market, but it doesn't matter. The one thing I've learned trading for over 4 decades, I don't care if you have a $50,000 system that never fails, or if you're trading the buy-sell line and the top-bottom 25%. your odds for consistency go down in choppy markets. That's with anything. So it doesn't matter. There's no system out there that works 100% well in choppy markets. The good news is that the 50-period moving average, along with the top bottom 25%, will keep you out of a lot of those choppy markets because you won't be seeing the type of signals. You'll see bars oscillating above and below, and you won't see a lot of top bottom 25%. So that's the good news. So basically, staying out of a choppy market is better than being in one and trying to make profits, okay? So that's the beauty about all of this, okay? How well does this work in divergence? Well, divergence is something, once again, that, in my opinion, is an urban myth. We don't really believe in divergence. There's no such thing. One trader's divergence is another trader's, signal. So I've traded divergence some 4 decades ago, and I saw no consistency in it. So I just, it's not something we teach, okay? Remember, someone looking at a chart would say, no, there's divergence here, or there's choppiness here, or there's overbought or oversold. We don't even use those terms. All we say is, where is price? If price is above, the overall trend is up. That's it. If price is below, the overall trend is down. And then we add some structure. Now, a signal still has to be generated using strategy number 1. If a signal isn't generated, you're not trading. So that's the beauty of this. It will keep you out of chop and out of divergence, so-called divergence, and out of so-called overbought, oversold conditions because of the way they're structured. They're being in sync with the market, okay? Victor says, do you start on a daily chart for trend and go down to 3-minute when day trading? Well, Victor, I don't know if you came in late, but that's exactly what I said. I only look at the chart that my signals are generating on. So if I'm day trading on let's say a 3-minute chart, that's the only chart I'm looking at. I really, not trying to be condescending and arrogant, but I really could care less what the daily chart is doing or what an hourly chart is doing. Remember, I think I said this maybe about 3 times, but if you missed it, I have found no consistency at all in looking at 2 different time frames. So therefore, we don't teach it. Same thing, we don't teach overbought, oversold. We don't teach divergence. We don't teach, volume, and we don't teach about fundamental news. Why? Because I used those things 44 years ago. So I'm here to tell you they really don't work in terms of consistency. So I've taken all the time and effort and lost money out of it for you. You don't have to waste your time on things that really don't show levels of consistency. So that's basically what I've done for you in teaching you all these things. I'm only teaching you things that have shown consistency throughout the years. But those things such as overbought, oversold, divergence, different time frames really have shown none, in my opinion. How long is the $37 duration? I believe I purchased this product a couple of days ago, and that price is for a duration of time and then a monthly payment. For $37, you had a monthly payment for $37? I'm not sure. I would contact Pro Trader Strategies, because if it's $37, you probably got a different product. I'm not sure exactly what you got, but I would contact Pro Trader Strategies. They are very flexible. We've been around for decades. No one's trying to cheat anyone out of anything and give you double sales or things of that nature. If you purchase something already, they will honor it, but I don't think it's the same thing. I mean, we hold steady to the same price. We're always changing different things, but if you have a problem, give them a call. Whoever signed you up, your trading consultant, ask to speak to them, and they should be able to steer you in the right direction, okay? Does it matter how far price is from the buy-sell line? That's a very good topic. Sometimes it does, sometimes it doesn't. What we teach our students in the beginning is just the beginning. Remember, ultimately, it's your choice. We want you to be in charge of your trading. But if you get a signal while you're learning these concepts and ideas, take the signal closest to or touching the buy-sell line, the 50-period moving average, because that way you'll have the less risk, okay? Oftentimes you'll see signals that are well above the 50 or well below the 50, and they kind of sometimes gravitate towards there. So you may get stopped out if you have one of our inexpensive stops. Now, if you have a larger stop, sure, you'd still be in, but a lot of traders in the beginning don't want to take on that much risk. So that's one technique. It is not written in stone, because there are some great setups that occur when price is well beyond being close to the buy-sell line. But this is just something, once again, research and see on your own. See what works best for you. We've had students do this, and after a while, some students say, you know what, Steve, I know you say to take the signals closest to the 50-period moving average, but it's been my experience for the market I trade and for the time frame I trade that it doesn't really matter. And I always tell them, great, then trade that market and that time frame. That works for you. You see, we want to encourage you to make your own trading decisions. You'll never see me give a class. You'll never hear me teach a technique or a system or strategy and say it has to be traded this one way. I mean, that's silly. Everyone should come in and use their own style. Now, the reason why we say, use your own style is because you can always edit and alter it. As long as the basic format is in play, it's still okay. But if all of a sudden we have a student that says, well, Steve, I'm trading your strategy, and I applied divergence to it, and I also applied, the weekly economic indicators. Well, we don't teach those things, so that's what we would say, well, now you're making it too complicated. Don't apply things that we don't teach. But if you apply other, bits and pieces that we teach, that's fine, okay? Is a sideways market the same as divergence to you, or have I been misinformed about what they are? No, divergence, I'm not sure what you've been told about, but divergence is when you have, let's say you're looking at a stock and it makes a low, and then it makes a lower low a week later. Now, divergence would mean that an underlying indicator is not confirming that. That's what divergence is. That's the basic definition of divergence. There's a divergence in confirmation. So if you're talking about a sideways market, that's not really, the standard title for that is not divergence. That's just called a whipsaw or a sideways range market, okay? These are great questions. Let's see, I think I have one more. Let me go backtrack here. Some friends I know who also trade do not know about the 50-period simple moving average line, and I try to share it with them, but they think they don't need to know anything or other than what they're doing, even though these tools would greatly help them. Why do less than successful traders get so proud about being less successful? These methods and tools would really change their life. Am I wasting time trying to start this with others? That's a great question. This is from one of our students, Erica. It's a great student of ours and has learned a lot. And yes, there's one thing I've learned is that you can only teach someone who's ready. In other words, it goes back to the old saying, you can't lead a horse to water, because if they don't want to go, they don't want to go. And that's just where they are right now. And usually students will buck. I mean, personally, I know I did when my mentors taught me these things 4 decades ago. I didn't readily access them and say, oh, okay, I'll believe everything you say and just drop everything I've been taught and start trading it tomorrow. It took me a while to come around, but there's a good thing about losses. After a while, if you sustain enough losses, they're a really good way to teach you to turn your way around. So if these traders who are friends of yours continue to lose money, they will turn their head around and ultimately want to change. That's the main thing about learning. Losses are sometimes the best educator around there. The only trouble is, with most techniques, they're like I said, the slot machines. They will give you these wins every once in a while, where you have a false sense of security that you're doing okay. But the thing is, if you track your trades, if you keep a record, and you look back over the days, the months, the years, you see that I have never had a winning year or winning month. So you have to look at that to see the results. Then maybe you can turn around your friends around. But ultimately, you're really just responsible for yourself. I would personally say it's kind of like beating your head up against the wall. I would just focus on your own trading, because when they're ready, they'll come around, okay? Everyone has to be, where they are at the moment. So remember, once again, this $37 offer is for a limited time. I believe it's only for this weekend, okay? So last question, do you use this strategy in a sideways market? Well, yes, you can use this strategy number one, in any market. Remember, but if it doesn't meet the conditions, a signal will not be generated. So that's the beauty of our methods. We wait for a signal. It's not like we just trade off a whim or off a feel and we say, we got to get in, because I'm bored or I need some action, or everyone else is buying, so I've got to be buying, even though nothing's happening. No, we wait for the market to tell us, according to the requirements of the strategy, when to get in. So sometimes that'll be, maybe every day. Sometimes it'll be once a week. It all depends on what market or what time frame you're trading. One thing I always tell my students, it is a requirement. It's not a request. It's a requirement to paper trade. You have to paper trade first. I still paper trade. I've been trading for 44 years and I still paper trade. I'm currently paper trading a method right now. I've been doing this for about 6 months. So if I can paper trade after trading for over 4 decades, I'm sure you can paper trade for a couple of weeks, maybe a month or so. There's so much more you'll learn through the process of paper trading. And I always say, think of any endeavor, any career, any hobby. No one just steps up and starts playing a game in the NBA or in baseball in the major leagues that day. They always practice. They always go through spring training. They always have an actor will always go through a study process or go through a rehearsal. But traders feel like, okay, I've read this, I'm just going to start trading tomorrow. No, you have to paper trade in order to fully understand the process. This, once again, is not a request, it is a requirement from all of our students. So it doesn't matter if you're a hedge fund trader, which we have some hedge fund traders who are students of ours, we tell them to paper trade first. It doesn't matter if you just started trading, we tell them to paper trade, okay? Listen, these have all been great, highly knowledgeable questions, okay? I have to take off now. We're getting close to the end. I just want to say thank you so much for attending, taking time out of your Saturday. But please, this $37 offer is not going to last long, I believe, just throughout the weekend. So if you want to take advantage, contact Pro Trader Strategies. As the other question has stated, if you feel you've purchased this before, I really don't think it's the same thing if you were establishing monthly payments. It's got to be a different program. But if you have some questions, don't worry. Contact Pro Trader Strategies. There's no obligation. They'd be more than happy to work with you. They're very flexible, okay? As we close out one last time, I just want to say thank you so much for taking time out of your Saturday. I wish you all the best of luck, but most especially, I hope you take advantage of our secrets offer for $37. Thank you so much for attending today. I'll see you next time. Bye-bye.